Wow, wow, wow. Hope everyone has survived. The third highest volatility index, weeks above 60. More was only in a great financial crisis of 2008 and the COVID crash of 2020. So I hope everyone has a good game plan from here. Otherwise, please stay tuned. In today's video, we're going to review fundamentally what's that the button, what to expect, and what is going on from here onwards based on the Fed comments. Good morning, good afternoon, everyone. My name is Russ, and here together with Nick on DataDash, we are covering various asset classes. And today, after the Black Monday, many of you would tell to their kids, "Oh my God, I survived the Black Monday flash crash." And your kids or grandkids gonna say, "Oh my God, what a legend." But jokes apart, if we're gonna look right now how the Fed watch tool is pricing in the cuts, we would see that the picture here is very drastically different. Just a month ago, on the 5th of July, you remember we spoke about the Fed looking forward to cut the rates, but the market still was pricing 22% probability that the Fed would remain the rate unchanged. And what do we have now? Absolutely zero. So those two probabilities is either Fed is going to do one rate cut to save the markets, or they're going to come up with an emergency double rate cut and reduce the interest rate by 50 basis points in one shot. And right now, market participants are seeing those as the most probable outcome. What do I actually think about that? Well, you know what I think about it. I think that the answer to that question lays down in the unemployment data. And if we're gonna go now to Forex Factory and see day by day when those data is gonna come, we would realize that unemployment claims, the next update is coming on Thursday, August 15, roughly 8 days from here. But the CPI month over month and year over year comes one day earlier on Wednesday, August 14. And I personally think that we are not so safe with the CPI. I think there is still a risk after seeing last ISM price that the next CPI has a shot to be back up. Well, on the other side, it still looks for now that unemployment claims are doing okay. And we even had this article in Wall Street Journal that says that market sell-off appends Fed rate cut calculus. Those guys are basically saying that if the jobless claims are going to spike, the Fed would consider 50 basis points cut. And me personally, I don't think they will do 50 basis points because that is too intense. That's too intense pressure on the yield curve on inversion. That's too quick of the move, and that can very probably cause non-linear events overall in the board market. And this is not something, in my opinion, that Democrats would risk doing on the election year just a couple months prior to the presidential elections. So I still think that September we're going to have one rate cut. I still think that until September we have time for a quick and rapid, intense bounce. This bounce might even lead us to swiping the all-time highs on NASDAQ and S&P. We're going to see if it also give us a nice bounce here on Russell 2000, because if you remember, I'm much bigger believer in a Russell 2000, preceding that yield curve on inversion and overall medium caps that are in their cycle lows most commonly. And moreover, on top of that, we have a hint from the Federal Reserve Bank of Atlanta that the economy is doing quite fine. So with all that said, I don't think those 50 basis points cut is on the table in September. I think we have hints from Federal Reserve. If you are hanging out here for a while, I think we've been quite accurate actually predicting the Fed moves. I also think that Fed is doing a certain direct or indirect hints. Very often it comes from Nick Timirash from Wall Street Journal. Very often it is based on the comments of administration leaders that a day or two prior to the CPI announcement are actually signifying the certain direction in the policy making. And so if you actually watch those closely, you more often than not can understand how the Federal Reserve is looking forward to those events. You're going to say, Russ, enough of this macro data is complicated and how to interpret it. But guys, it is quite important actually to spend more time, because of course we're gonna go in the charts just in 30 seconds, but you have to understand that technical analysis in those kind of extremely high volatility events, when so many things are being put at stake all together, including the Bank of Japan raising rates, the disabling of carry trade that is caused by that, and many more other factors, are not something that we can derive from charts. It's very important to understand what happens behind the scenes. And here I'm giving you a bit of hints of those. We're not going to spend more time now on Bank of Japan because that's a complicated topic that would require another half an hour of the separate video. You can check it by yourself. Going into the charts, you can see already NASDAQ. What a tremendous drop from those top when I was starting to tell you we are getting too far, too overextended from 200-day moving average. Since then, 16% down and tag of 200-day moving average. On the other hand, S&P 500, let's have a look on that chart. We did not yet tag 200-day moving average, and yesterday close was pretty bad. So of course a lot of people have been sidelined, waiting to add on that tap, and maybe that's the reason so many beats have been placed in this area that we did not slice in, and that's, in my opinion, can be much more painful for the market participants to not being able to add on this immense drop here, and we might not even let anyone get into that point before we actually bounce back with a severe strength, leaving everyone sidelined. The only thing which is kind of contradicting that theory is that yesterday closure. I'm going now on a 5-minute time frame, and you can see the closure. I always look at the closures. That's our closure yesterday. That's a very bad closure into today. So I think there is still some risk. We might also have one or two slightly red days, and then we can bounce back towards the end of the week. Yeah, that particular de-risking into the market closure. I always stay for the market's open market closure, no matter what. I'm observing New York Stock Exchange. That is not a good closure by any standard. You know, if we have this last 1% drop in just half an hour, that's quite bad. On the other side, we are gapping in today at pre-open. That doesn't mean much. That probably means we just gonna grab more liquidity that has been generated on inefficiency of that gap. Maybe we gonna go also resolve that fair value gap, right? Do something like that, and then take all those unprotected highs here. That is quite probable, but I think honestly what's so important for you to understand in the severe drops, whether it's Bitcoin, whether it's NASDAQ, whether it's any other asset class, these V-shaped recoveries are not that normal. They happen during the change in policy, like during the COVID times, right? When we starting to have this very much uncontrolled quantitative easing or money printing, you know, something that I do not agree with, and I think a lot of small business owners might not be agreeing with either, but it happened how it happened. So normally those V-shaped recoveries are rather exclusions. So we need now to spend a couple more minutes on the charts and see where to add on the drop. Let us draw it straight here on the chart. So if we see a severe drop like that, and then obviously based on the oversold, wherever we have 10 RSI, for example, on hourly, it's normal to have a little bounce. But if we were consolidating here in the range, and then we cannot reclaim that range in order to go forward, and instead of those kind of rebounds, we are having something like that, we are just retesting the resistance that was initially the support of the previous range. This is not the place you want to go long. You want all the chop to resolve, and what I want to emphasize here, that this chop can sometimes take weeks, sometimes it can take months. And I'd like also to go now in Bitcoin 2021, this famous May drop, to see how long it took us to resolve. So it may do that. It may also come and take all those easy longs that stepped into the zone of so-called oversold. We can bleed a little bit down, take those lows, come back, take that high, make everyone very bullish, thinking that the market structure break is happening, MSB. But the thing is, guys, after those severe liquidations, after several billions of derivatives have been wiped from the crypto market, after a few $1 trillion have left the stock market, you also understand that it's very traumatizing for market participants. Some of them do not have liquidity, some of them have their accounts very much exhausted. Some of them are dealing with the severe emotions, and this is also not the point in time that they would put all in, losing already so much, having their premiums, their targets severely compromised, to add all the ammunition they have here to just push the market up. No, they would take profits here, they ended here, loaded here, they took profits here, so market naturally corrects again, and then we start forming the range. And only once this range is formed, only once market can actually transact on both sides of the range for long enough, only then we can speak about the breakout. Looking at that Bitcoin, huge drop, from 59 all the way to $30,000 in a matter of several days in May 2021. What is the lesson we can learn from there? So first of all, here you see we had a cascade of severe liquidations. We're starting to form the range, and then we bounce next day, trapping all the late shorts. The bounce from here has been very severe, 40% bounce in, guys, we are on a daily, we are not even on a weekly or on a monthly. It's a very intense bounce, and we're starting to form that range, right? So of course, it's a little bit subjective. You can say, oh, let's take the range like that. Okay, fine. Let's consider the range like that. Let's maybe take out those weeks and consider those as a deviation or our PO3 from the range. Okay, so in this case, the range is a little bit more moderate. The range gives us roughly 30%. And how long did we stay in that range? From the day of the drop, it took us roughly 79 bars. It's almost 3 months, 79 days to get out of this range. So this is something I want to let you know. You don't have to expect the range to be resolved tomorrow, because I see right now a lot of market participants, a lot of people in our Telegram group, they're like, wow, but everything is pumping back, I should have just bought, and now they experience a lot of FOMO, so they want to get in. But they are forgetting about geopolitical factors, and they also forgetting, most importantly, geopolitical factors we cannot predict. But what we know about the market, that market is much more ranging than trending. The market is trending only in 20% of cases, but because a lot of participants in crypto learn through the bull markets, they start to believe that majority of times we are actually breaking out. No, majority of times we are not breaking out anywhere. Majority of times we're staying in the boring range markets until the market can resolve itself. So here I recommend you to be a little bit more cautious when it comes to understanding that we are not breaking out as of tomorrow. We can, of course, liquidate all the late shorts. We can bounce to 57, to 58. We can even bounce to 60. But normally, we would come back to those zones of inefficiencies that has been formed at the lows of 50, 52, 53. And this is why I normally go actually on 3-day time frames when I'm looking on those kind of huge weeks, on the market to get resolved. What we can do here, of course, we had this old range, let's just take it for sake of simplicity from the very top of the week. And now we lost this range, right? We lost this range and we are retesting it from the range lows. We did not yet reclaim this range. And then we have that range from the past that has been formed by this uptick in January. And that's where we have tapped now. So as soon as we are not confidently closing here above this 59, 60,000, of course we can spike here, but it's important that we have a couple of day closures here or 3-day closure. I would actually expect us to bleed down, maybe do something like that in that fashion to chop out as many traders as possible. And then with the same 3 tap as we had in our 2021 scenario, you can also Google Wickoff accumulation pattern. You would see that market makers are playing this very interesting psychological game to make you believe that market structure break is happening here, market structure break is happening there. So you might see those kind of taps here to make you believe that higher high has just been appearing, so you would actually go long. And then honestly, until we confidently, accept into this range above, I am not that interested to add anything on the upper side of the range. You can, of course, pull your fibs just to see, you know, where you don't need to be super smart here. You just can unclick it all and see where the 0.5 zone is. So you don't need all of those, right? Normally, how they teach you to trade in the hedge funds, you know, you normally, if you expect the uptrend, you should not be buying in the upper side of the range or above the VWAP, depend if you're intraday trader or more of the mid or long-term accumulation person. So in any case, said simply, I don't want to buy above 54,000, 53.8 thousand. If I'm gonna add, it's gonna be on the taps into the lower part of the range, right? This is if you are a holder and a long-term accumulation person. Otherwise, of course, there will be a multiple scalps, multiple opportunities on intraday trading. Let's maybe, before we go on intraday, let's have a look on Ethereum. Our stop loss got hit here at 3,080. That's all fine. We are not affected much by the severe drop. We were not in the position. What's important, on one hand, people are saying about Ethereum just bounced 17%. Wow, yeah, this is great. I mean, I've been adding, I've been staying online during the severe drop. I've been adding a lot at the zone. I sold it all based on the fact that we could not even accept into that range here. So what I'm looking at now on, first of all, Ethereum BTC, a very poor strength. We could not even reclaim that level that have been indicated by me at 4.6%, so not exciting. When it just comes purely to Ethereum, you also can see just on an hourly time frame, nothing complicated that you need to do. You just need to formulate the range here and here, and despite, you can say, oh wow, but we kind of held this diagonal uptrend. Amazing, but as soon as we are not able to reclaim $2,550, we are not interested to get along here. This is something I want to see. I want to see the new highs, and only an acceptance into these new highs I would only start considering that market structure break can take place. So this is a very different mindset that you need, in my opinion, guys, to onboard. A lot of people saying, I want to buy as cheap as I can. I want to buy at 2,200. This is great. Me not. Because first of all, I don't want to be chopped if the market is chopping from there for months, being stressed, being worried about my trade. I'd rather allocate my capital somewhere which is actually performing with a higher momentum and with the market structure break. Moreover, I want to emphasize that I would rather lose 1 or 2%. If that's a great trade, it's going to do another 20-30% because this is crypto, this is not the stock market. I'd rather lose 1 or 2%, but I would wait for confirmation rather than just trying to buy as cheap as possible and praying that this is the future of technology and that's going to be up only from here. So then you see a bit of my mindset. Of course, this is a little bit harder to do when you're newer to trading. Like, first, the only number that you see is price. That's the only reference point that you can build your conviction around. But we're here to learn, and that's why I'm spending time teaching you guys, also in the Telegram group. We first want to wait for the confirmation, and until this confirmation appears, we are not interested. And ETH, frankly speaking, looks very weak. There are altcoins that are looking so much stronger. I'm just going one by one through the list right now. You see, most of them are looking better than ETH, but still not convincing enough for me, because we had this structure. We had a low, high, lower low, lower high, lower low, lower high, and then we start, of course, creating this liquidation lows. We started this uptrend, but we still cannot even reclaim this high. So we do not have what? We don't have the market structure break. But you see how Atom is already looking much stronger than Ethereum, because we are at least able, to reclaim this low here, start to consolidate into this range, and maybe with a couple of bounces back and forth, we can reclaim this high and actually shoot up from here. That would make me interested. I already made certain scalps because that's another structure, that's another entry opportunity. What you have this market structure break from the little multi-hour range where you've been consolidating. So normally, if you want to enter long here, you do it like that. Your stop loss should be around those lows, maybe not waiting for the entire week, because you also don't want, to sit and wait for the things to bleed into the very bottom of the week. You want to see the strength here. You can also just even say, it's more than enough for me to wait for 2.5%, maximum 3, because if we're not breaking out here and we start getting back into that range, maybe we need one more tap. I don't want to sit for that tap. And then, yeah, your TP1, very simple, this low, which used to be the low in the range, right now it's going to act as a resistance. Your TP2, if we are successful, this is 5.15, right? How simple is that as a trade? Sometimes I would give you the idea how to form these trades, but I cannot also put every trade on every altcoin. They're all acting the same, right? There are other coins. We can look into Arviv. I'm just going by alphabet. Most of them look absolutely the same. Aptos, Arbitrum, right? Arbitrum is very weak, similar to Ethereum. Ape, all of them look the same. There's not much interesting here. But there are the ones that look different, When I look, for example, at VIF, I understand that's the meme coin, but you see how, for example, VIF is already giving us absolutely different picture. It has been accepting into this range low. First of all, not successfully, you see this red candle, then successful acceptance, retest, so 2 retests, and then spiking up 26% in a matter of 8 hours. Not bad, especially taking into account that this uptrend were able to change the market structure. So we actually have a very clear market structure break from here. So what I would expect from there, I maybe retest of those highs, and then you can try to beat here. Your invalidation will be here. You can also try, depending on the reaction here, of course, it's more of a risky trade. You can also try to beat it here. But guys, keep in mind, this is not something you want to buy and hold forever. I am just explaining for you how the scalps would work. Of course, you totally need to synchronize your altcoin moves with Bitcoin chart, because in my opinion, if Bitcoin gonna stay in that range, this is not yet the bottom for alts, because obviously I understand now people are impatient. They want to add to their long-term positions. I don't think this is a place to add to your long-term positions. I think this is the place to make 5K here, 5K there, just scalping a few alts on these nice, very volatile moves. If you understand how to work with the position sizing, risk management, stop loss, take profit. If you are comfortable with that, I think that's a really great place to do that, because Nasdaq is volatile. I think Japanese yen gonna give us finally a breather. I also think that actually would allow the assets to flow back into the stock market. Bitcoin can actually act quite well. If Bitcoin stabilizes a little bit, the Bitcoin dominance that has been very, very, I would say overextended, about 56%, could give us a little breather, so alts could run. So yeah, this is a couple of weeks to scalp. This is not a couple of weeks to build your positions into infinity. That's my personal opinion. When it comes to me, as you can see, I sold most of the Ethereum. I bought at the bottom at around 2,507, 508, around the zone, and I'm really looking forward right now to accumulate more. As you can see here, I'm happy to add anything around 2,000 in here, expecting more swipes below that zone, but I'm also thinking I might get front run. So either I add on a well acceptance above 2,550, or I do that with still something that I've been showcasing you guys before. This is an opportunity for you to add multiple in one opinion, which works the best here. And you can of course integrate these other exchanges too, but mostly on USDT trades. That's another problem. During the cascade of liquidations, people were asking me, how do I add stop loss? How do I add stop loss to market order? Honestly, that's the reason why I explained the reason I'm using Bybit is because you can do all of those here before you even create a trade. Everywhere it's possible, but here it's possible to do on spot also. So if I want to add, for example, 10,000 USDT on Bitcoin, I can decide, okay, in case of the geopolitical event that we're gonna lose 48,000, I want to step away at 47,000, but I'm expecting, for example, a reclaim of 60,000. And so I set it up all here before my order is already filled. And as I said, guys, if you want to trade, of course, on spot, I think that's the best platform to do. But also, if you want to try derivatives with $100 and just understand what's your risk reward on average trade and what's your win rate, on the link down below, Bybit offers 500 USDT free trade. All you need to do is to deposit $100 and you can play it from there. In my opinion, when you are more confident to trade with $100, you are much more confident to take your decisions on the long-term holds. Unfortunately, today we don't have the time in this video to go into silver, to go into tech. I promise to do it next time on Friday. Please stay tuned. Much love and see you soon. Bye.